Pickleonia.
Good morning, everyone. There should be more intros. It's not nearly long enough. Would you say we were on GME and Upstart setting up on GME and Upstart setting up for a period very similar to the one before March OPEX? Deferral 1 month into OPEX, 4 months after the previous one, which came early. It kind of looks that way, yeah. We have the same kind of release of pressure that we saw in like Jan 6 that's in line with the XRT FTDs. I would say the biggest difference between this and March is that in March, XRT remained on Reg Show. This time it's off. I don't think that makes a huge difference in settlement, but the liquidity levels are about identical. So, although GME is a little lower now than it was in March, but the like IJH and XRT and IWR are all pretty fucking low. Thanks for the 2 hour intro. See you next week. See you, Gordon Ramsay. Did you really just sit there waiting for the intro to get over with? Yeah. I mean, I start it as I'm like getting things together, but I'm usually more than done getting everything together long before the intro is over. Good morning, Greg. I enjoyed your exchange with the Upstart Insider throwaway account. I hope more shills come out to discourage YOLO leaps. Me too. Settle the debate. What's the better breakfast item, pancakes or waffles? That depends. It depends on the pancake. Depends on the waffle. Generally, like just any diner in America, the waffle's gonna be better. Their pancakes are gonna suck and taste like flour. I don't like a thick pancake. I like them real thin and buttery. Almost a savory pancake. That's because I don't like syrup. You thinking of selling CCs going into earnings? Absolutely fucking not. Are you? Do you think SPX SPY breaks the downtrend line at 4100, 4010? Would it doing so change your end of year market price prediction? I don't really have an end of year market price prediction, but an upside break is definitely possible. We might float around this range like that we're at now into CPI. This week could be kind of maybe like volatile but stable, right? Like I don't think our range will be significant, but I think we'll trade a lot within the entirety of the range. Upside positioning looks really good though. It's possible that the market just rises in anticipation of CPI and PPI data. I actually had somebody else ask me a question they wanted answered on the stream. On Discord, kind of in a similar vein. Let me pull it up. 1 second. It was one, if December PPI and CPI meet or exceed expectations, what do you feel is the likelihood of SPX reaching 4,200 ahead of the federal rate decision SLD period? Pretty good. I would say moderate to high if PPI and CPI meet or exceed expectations. Meet is a little different than exceed, but um, yeah, I would say that that's moderate to high, depending on how much it beats by. If SPX were to hit 42, if SPX were to hit 4,200 ahead of the Fed rate decision, what do you think the likelihood of JPOW announcing a 0.75 rate increases? Same scale. Um, Moderate. With the recent jobs report, hypothetical PPI, CPI numbers and all. Yeah, so if CPI continues to be reduced, I think the chances of the Fed moving forward with a 0.75 increase are really slim. I think most of the market is betting on 0.5. We'll probably see 0.5. There is a chance they go a little bit harder than that, but they may do 0.5 and get real hawkish for Q1 of next year in order to kind of pull back some of the exuberance, because the market is getting a bit unwieldy, especially going into Q4 earnings and Q1 earnings, which are probably not going to be very good, right? Yeah, I would say that I think earnings are gonna more than handle any downside that the Fed doesn't cause themselves. How are you feeling about Apple puts Samara at open? Why aren't they pulling more manufacturing out of China? It's probably bullish. You expect to dip next week, then a run into OPEX, or what are the possibilities? Well, don't forget we still have the potential deferment schedule. I don't know. I mean, I don't know what that's going to look like. Obviously, with Reg T out of the way, I would lean more towards a similar situation to March, where we don't see uh, a release of liquidity until OPEX, but um, that might not be true this time, right? So you have to be prepared for both possible outcomes, or all three possible outcomes, and that's means you need to be prepared for like 4210 and SEA 15C3-3. So uh I don't know. I expect they'll try to short earnings on GME because they need some liquidity right now, and that's probably the best place to get it. But GME could bounce back pretty fast, especially if they can make the price too cheap. Hey Greg, I'm trying to finish my roll and wanted to play IV for Upstart. What should I consider with Upstart having Jan strikes above 100? You're looking for Vega, right? I mean, at that point, once you're that far out of the money, you're looking for Vega. You're not looking for uh like how far out of the money you can go. I mean, the further out of the money you go, the less Vega you're gonna have, unless you have more theta, right? So really, you're just trying to dodge delta sensitivity, and you don't need to go that far out of the money to do it. And actually, if you're playing like Jan 2023, you want to be kind of closer to the money because you don't have a lot of theta, and hence the Vega is lower the further out of the money you get. Sorry, Renzer. FTX gap fill or nah? Oh, look. Yeah, it could. Man, it really doesn't like that price range. Yeah, I mean, at least this one, right? 187, which is probably a much better target than trying to hit like 200. And then if it does hit 200, bonus money. But yeah, it doesn't look terrible. Wow, it's really gappy. I like that. They have a dividend coming up there. I'd be cautious of the post ex dividend sell off, which is this Friday. So you may start to see a sell off after the ex dividend date. So if I was in this, I wouldn't be targeting a very long time frame. You stick with your GME price prediction of Ivy rising liquidity grab before earnings. I don't think they're going to grab liquidity before earnings. I think they'll try to grab liquidity during earnings by shorting the shit out of the stock. Yeah, I think we could start to see a steady price increase the next week. Any short position at this point, because of how low liquidity is going to bounce back pretty fast. Like any big short, I don't know how much liquidity they'll get out of earnings. Probably not a lot, unless there's a mass sell off, which there won't be because it's GME, right? IV just rises into earnings because market makers price up IV. I don't know how much it'll rise, and it'll only rise on near dated contracts. When does this bullishness die off? Probably into earnings season, so mid through end of January. I don't think we're gonna get a worse CPI print, and PPI is already trending down quite a lot. I'd be even more surprised if we got a bad PPI print. Um, but CPI is likely to be fairly bullish, and this will probably continue out into the beginning of next year. We could see a sell-off into the end of the year. That's kind of something I was discussing with Gaff. We're seeing like a lot of asset-backed securities or ABSs are starting to rise, which would indicate a return to like a bull market. Except I think they're kind of just pumping a bit into the end of the year, and then they're gonna sell them off because that market should not be very healthy right now. Bro, should I shoot myself in the foot right before GME's earnings? Then ask 100 questions about why I should buy back the cover calls, and then cry when my shares get called away. I think the chances of GME posting positive EPS this quarter are pretty slim. Um, maybe like 20, 22, 25% chance. It's pretty low. Their quarter three earnings usually aren't very good. I think positive EPS is far more likely in Q4. And then it's less meaningful in Q4, right? Because that's always like seasonally their best earnings. So, um a surprise here would be really important, but they'd have to reduce SG&A so much. It almost seems unattainable. Hey man, hope you're having a good weekend. You're expecting a bit of a leg down on oil into the end of the year. Got a lot of big OPEC meetings this week, and a decision from G7 to put a cap on Russian oil prices. Um, there could be a lot of volatility this week in oil. I think oil's probably got one more good rally in it before the end of the year, but I've been targeting like end of January, February for that to really begin to kick off. So if we do get a good dip, it might be a nice entry opportunity. I'll be watching Oxy, obviously, and Halliburton, which are my favorite two oil stocks right now. And then maybe I'll pick up oil futures like I did last year again. I doubt it, but I might. Depends on the decision with Russia. I'm not an oil expert by any means, but I'm pretty sure if this decision passes with Russia, then Russia can kind of like wash their crude and start supplying the market again. And if that's the case, then yeah, oil prices are going to come down really fast. Hey man, you having a good weekend? Are you expecting a bit of a leg down on oil into the end of the year? Okay. They're mixing it up on us each time. Yeah, I mean, all you can do is be prepared for as many possible outcomes as possible, right, bipolar? I mean, that's what we try to do with our OPEX positioning is, the bare minimum upfront capital in order to cover all the bases. But if you don't like that, you can always just buy out of the money leaps and average them down into low IV. Hey man, hope you're having a good weekend. You're expecting a bit of a leg down? Okay, I got that one. Sorry. Guys, if you could tag me so I know which ones are questions and which ones are chat. Think about doing a short strangle with my GME shares for conservative money while waiting for a push up. I was thinking about getting CSPs at 25.50. Cover calls way out of the money at 31.50. Do you think the shares could run up to 31.50 this week on earnings? Would you wait for cover calls till after this week? 15 seed 3-3 FINRA settlement begins on the 7th, I believe. So I'd be careful with covered calls until the stock really runs. You'll make more than enough money back. Are you still DCA? Hold on, I'll get to that in a second. But yeah, if you just wait for a run instead of trying to sell GME CCs for like a fucking dollar each and less. I mean, at 31.50, you're selling them for like 15 cents a contract. If you just wait for a run, you'll significantly make up any loss sustained by not selling over the previous like 3 weeks or 4 weeks or however long you have to wait, right? I mean, significantly. You're talking about the difference between selling out of the money contracts at 15 cents and selling at the money or in the money contracts at like $10 of premium, right? Which is a significant difference. Um, so yeah, just be patient. You only really need to sell cover calls on GME at the peaks. You don't need to do it every week. Don't get me wrong. There's weeks where we're just grinding where it's fine. But when liquidity is like it is right now, I wouldn't take the risk because the chance not only you probably don't risk getting like blown out or losing your shares if you sell enough theta on them, but you miss out on a massive amount of opportunity to profit on that premium increase. If you were looking to buy more GME shares, would you try to do it during the earnings dip after hours or wait for the next few days after? Depends on how extreme the earnings dip is. I mean, if it goes down below like 22.50, that's a pretty good fucking price at this point in time. I mean, Jimmy's book value is higher now than it was at the beginning of the year, so um quite a bit higher. So yeah, 22.50 is not not a bad price on Jimmy at all. if it falls down into that range. So if you can realize that in after hours, awesome. I don't think they'll get enough liquidity from the short to affect another larger short afterwards. Earnings would have to be really, really bad. Wouldn't earnings be a good time to run the stock up for liquidity? No, they don't want to do that because of the way options expirations are arranged. It's not beneficial to them. You have to understand they want their like volatility shorts to expire. That's why we generally run after OPEX, unless there's like a risk off type of situation like August or last November a little bit, right? So unless something presents an extreme amount of risk to their positioning, they would prefer to run the stock during OPEX. That's when it's most advantageous. I think everyone assumes that they want that we're, I think there's still a lot of assumption that we're working against them, right? Our positioning that we get for OPEX is very similar to theirs, right? Like our intentions are similar. We want to ride the long side and then short the volatility at the top. That's what they want to do too. And you know, us having calls is beneficial to them. They want the market maker and the ETFs to absorb the majority of any loss that occurs. Wouldn't earnings be a good time to run it? Sorry, I'm trying to find the next. Okay. Need advice. I never sold CCs. I have to lower my GME cost basis significantly. Does selling CCs after earnings make sense? Not really. What do I need to look out for? Any advice? Thanks for everything. You need to be patient. Wait for runs on GME greater than 25-30%, and then start to look to sell covered calls. If GME is trading above Gamma Max, that's a very good opportunity to sell covered calls. If it's not so great an opportunity, you'll get better at it and you'll be able to sell more of them during, downside drift, and you'll learn to roll them down. But initially, don't sell them unless it's run hard, like lots of volume, significant price increase. If you follow that very simple set of rules, you will yield a significant amount of premium off whatever shares you own, far more than enough to lower your cost basis. Do you think Jimmy will drop to fill the gap at $23 before moving up? Possible dip after earnings. I think you'll see Jimmy drop to fill the gap at 23. Yeah, it's possible. I mean, this is probably like our range, like 21.98. These are the downside resistances historically. So 2250, 2166, 2005, and 1942. If we base it off, like we can't really base it off earnings in May, but if we base it off the pre-May OPEX, like short, we went down, from like 23 to about 2170. So I don't think with earnings on the table, they shorted really hard in March. I'm sure everyone remembers that, like the overnight drop into March earnings, which we bounced back from really quickly, right? Because there's no liquidity. But I think like sub 25 is possible. Honestly, like 2250 may be a stretch, but we could see it. Remember, the more they short, the more ability to short they lose, right? So it's pretty expensive to drive the price down, $3 right now. Not easy for them, and to drive it down $5 would be very difficult. I don't even know if they'd be able to do that without really spiking the borrow rate. FTX gap fill or not? I don't think so, man. Wouldn't earnings be a good time to run the stock up for liquidity if the market continues up on the economic news this week? No, it's not advantageous at all. What do you expect the next window to sell GME I don't know. And they're running out of liquidity. They haven't covered it, so they're gonna have to, right? You just need to be prepared. I'm sure you could design a like conditional order which would satisfy the requirements, but if not, just be patient. They've dragged this out obviously a lot longer than expected. It's very similar to the price action we saw like November to March. So I think the best way to be prepared for it is to, just simply wait. And if we're above gamma max, if we're in a high volatility environment, if the volume has significantly increased over the daily average, which isn't very hard to beat, but that's what you're looking for an opportunity to sell covered calls, because you're almost guaranteed that the price will decrease afterwards, right? Like it won't stay elevated. And if you wait, you also offset the risk of having to sell into an earnings, which would have been the case if we had run on November Apex. You'd have had to have sold calls in like either before earnings or way after. For the same period around 12K, for the same price of around 12,000, is March 31 3900p or June 16 3700p better? I don't have that much capital. I'm just trying to keep rolling multiple puts if things are not going my way. So I want one that is most conservative and guarantees to print 2 to 3x. Okay, hold on. I have another Ko-Fi I think also that I need to get to. So let me try to get to all of those. Okay, so I'll answer this one. 2 3x. I want to hear your honest advice. I like 3900s. I have some that are further out of the money. Here's the deal, you're paying less premium for the ones that are far out of the money. If the price of the index drops significantly, right? 300, like you buy something at 4100. Say you buy a 3000 put at 4100, right? That and then the price of the market drops 10%, or not even, let's say 500 basis points. Let's be very conservative. I'm gonna get to all of them. Someone, thank you so much, man. I appreciate it. That contract's gonna like 7x, right? The premium value of that contract as its delta increases is going to be very, very significant, right? Especially with all the theta it has, right? So more theta equals more delta sensitivity. So you don't actually need that put to go in the money to be profitable. Its extrinsic value gains will significantly exceed your kind of conservative price targets. I think what you're aiming for is something that will go in the money. You can target like 4,000, right? Like that 4,000 level is probably very likely to see a pullback. Obviously the closer to the money you are, the more chance you have of going in the money. But those like far dated out of the money contracts, even the market doesn't actually have to hit that level for those to be profitable. And yes, I am still DCAing into puts. I bought some more on Friday, actually. And the next leg down below 3,500, I think it's gonna come with earnings. I don't think so. I don't think the yield curves are still unstable, and I don't think earnings is gonna be very good. We're gonna start to see a pullback in forward guidance from all the mega caps, and that's when institutions are going to start to sell their positions, their core positions, because those core positions will no longer have the growth potential that they had when they bought them, right? That's when you start to see equity sell-offs. not on rate increases and stuff. It's the deflationary environment that's far more damaging to equity prices than the inflationary environment. All right. The weekly MACD cross on GME is very intriguing. Has proceeded a 70% run 4 times since Jan 2021. Indicator wise, interesting, but other moving parts, of course, to consider. Yeah, I mean, we've had a BBKC squeeze signal for a little while now, right? TTM probably looks really good because, volume is low and volatility has fallen off really hard. So yeah, all the signals look good, but there's been many instances where those signals look good and it's led to fucking nothing, right? Check out Girk's School of Stocks channel. There's a CC video there. Oh yeah, that's right. Yeah, I made a video about what you need to know about covered calls. Well, the basics at least. Year-over-year improvements in financials are really good, even if negative. That's true. Yeah. Hey Greg, I was wondering what your opinion on Beyond was for the squeeze play. Yeah, I'm well aware of it. They have some potential liquidity that they can release, and I'm not a big fan of that. Bar rate is at 182%. On 12/6, it'll be 13 days on Rickshaw, and it's had VUPs in the past. Yep, I know it has. It's risky. They can dump shares into those VUPs. I think they have a shelf offer. Yeah, I haven't been a big fan of Beyond for a while. Uh, it's been mentioned 1,000 times. I looked into it a couple times. Doesn't really intrigue me. I think it's very liquid. Um, the borrow rate that you're seeing is not reflective of the prime rate. That just means that there's a lot of retail short interest. Right. It doesn't mean that there's a lot of institutional short interest. When you straddle SPX overnight, how do you decide when to close out the losing leg? Do you ever set stops, say 50% loss, or just hope for intraday volatility to break even on it? It depends on what level I get it at and what levels I think the SPX will trade at. Usually I have a few days on them, right? So I'm able to get out of both sides, either at break even or get out of both sides at a profit. As long as the market remains volatile. Obviously, that strategy starts to fall off as market volatility reduces, which we are seeing, right? As you know, SPX kind of starts to continue pressuring the upside, and VIX is falling off. We're gonna see that intraday and overnight volatility reduce, but the benefit of that is we may see more volume come in or start to come in and liquidity improve. And if that's the case, then you can start to make more confident directional bets overnight, or set up spreads overnight, and that's kind of what you transition into once the volatility eases. Liquidity clip was dope. Win Moon. I mean, they don't have much longer. We know that. I wouldn't try to pin the date because of all the FINRA deferrals. Otherwise, like if we didn't have any FINRA deferrals to contest with, I would just say December OPEX. Would you say we could see our hold on, let me finish answering this. See our lowest market bottom before June 23rd at the latest, if not a market crash? Are you confident we could see like 3,200 or even below 3,000? If that happens, would it be before March or June? It would probably be after March. Those positions, as far dated put positions, will probably have to be rolled at some point. The point is to have exposure in case it does crash. But the bottom of the market may not be seen until like quarter 2 earnings, which, you know, is you're pushing into late summer at that point, right? So quarter 1, quarter 2 earnings are probably going to do the most damage. Um, quarter 4 and quarter 1 probably the extent, because quarter 2 is going to start to recover a little bit. So yeah, ideally, you know, you're targeting just beyond quarter 2 earnings, but the March position is to target quarter 1, right? Then you can, you know, wait for that to pull back, roll, and then target, you know, quarter 2 earnings. Those positions have to be managed. There's no buy it and forget it. If you want to buy it and forget it, just buy like Jan 4000 puts, right? Or Jan 2024 4000 puts. Otherwise, you're gonna have to manage the position. It's not gonna be that easy. I can promise that much. But yeah, I think the next downside in the market could see 3200, maybe 3000. 3000's excessive. Below 3000, you're gonna need a crash. Like you're gonna have a large equity sell off at that point, right? We say Q4 earnings won't be great. What's the basis of this? Unemployment is still low. People have money and seem to be spending, because margins are going to start to contract. We haven't yet felt the effects of these rate increases. These highly aggressive rate increases, the effects of these aren't going to be felt for months, probably a couple of quarters. But when they are felt, you know, earnings potential and margins are going to contract rapidly. Deflationary pressures are significantly worse for corporate earnings than inflationary pressures. Uh, Corporations are going to have to start to compete in smaller markets with tighter margins. And many of these corporations have been boosting revenue and EPS on the back of interest-free debt for a couple years now, and that's going to turn around and bite them in the ass really, really hard. You know, that debt's going to, you know, start to come due. Interest rates are going to change, and not going to be able to prop up that level of growth. And you have companies still trading at like 40, 50, 100, 200 PE ratios, and that's not going to be sustainable in a deflationary environment and into a like drawn out recession. Keeping an eye on wheat, not really. I have some, but I haven't looked at it. Just wait for bad news about food; it'll spike, and then you can sell your leaps. And then you wait for it to come back down again when those fears resolve, and then you buy more leaps. Food pricing is unstable, so that's kind of the wheat play. My upstart 123.40 is too aggressive. No, but just, you know, if nothing happens by OPEX, you'll need to roll them because theta will start to burn them up. When Jimmy runs, what's the aggressive PT that we can depend on? If it runs at 35 or puts at 28 strong enough to pull it back down. It depends on if the puts capitulate or not. Most of those open puts right now are for December 16th. But yeah, I mean, to some degree, they have to short it. If gamma collapses, then it's very easy for them to short it back down because the market maker starts hedging in their favor. Pretty sure you covered this before. Do you anticipate CTs will be worth it anytime for folks with a $40 cost basis? Yeah, wait till we run. Wait till the price goes up hard on volume, and then it's worth it. Otherwise, it's just really not. I mean, unless you don't care about assignment and you're trying to trade it, but you know, there's risk involved in that too. You're still on the shorts being a rough spot right now. You expect to see a lot of short squeezes across the market. If the SPY rallies to 420, 430, not short squeezes, but short capitulation, yes. Yeah, we'll see that pretty much market wide. Everything's been sold pretty short over the last few months, and the shorts have been hanging on through this bounce because they'd been betting on a crash. And yeah, if the bear rally persists, it's going to continue to apply a lot of pressure to their positioning. That the melt up is still very much in effect until we get some bad economic data or a bad earnings period, right? I think I'm gonna hold my December 30 SPY 400 puts. I'm up on the 400 calls. Smelling an opportunity to average down or cut for CPI and lean bullish. Also, isn't CPI on an SLD week? Yes, it is. This is the Fed decision. I would probably want to have some more neutral positioning going into that period. But until then, you're probably okay on December 30th 400 puts. Theta on those is a bit weak. But you're up on the 400 calls. Well, yeah, at least you have the calls, so you have stability in the position. I mean, as long as you're kind of in both, I think you're protected from your losses. I don't know exactly your positioning, but it sounds like you're fairly neutral. Yeah, well, the risk is positive EPS, which is I agree, unlikely, but it's a big risk. Or any other announcement, right? I mean, how much work does GameStop really need to do to get some bullish momentum? Like, they don't have to say much, right? They could just drop like a tiny piece of forward guidance, and then your CCs are blown up, so you could capture a small bump in near-term volatility. It doesn't seem worthwhile. Very Daki, GitLab, Casey's, Costco, GME all have earnings this week. I know. Dollar endgame from Peruvian Bull is bullshit, right? I kind of think so. I think quantitative easing would begin way before we hit any kind of risk of hyperinflation, and inflation's already on the downtrend. When you straddle overnight versus intraday, do you generally buy greater than 4 DTE? 3 to 5, generally speaking. I need to remember to buy more Theta. Theta's great, especially if you suck at trading. Every company, or if you're not good, I don't want to say suck at trading, but not experienced, right? Or you're not very good at managing your positions and rolling. Then Theta is a lifesaver for your port. You might not get the leverage you want, but you're far more likely to be profitable with a decent amount of Theta. Every company is going to do voodoo accounting for Q4 or Q1 in hopes of not getting whacked. Are they? Or are they just going to be honest with their shareholders? They've already been doing voodoo accounting for some time now. Especially like Apple and Amazon. They've already really been, kind of cooking the books to push through those nearly positive or just slightly negative earnings. And that's really not going to last. If you were to play this with shares, SPXU or SPXX, buy around 4,200, SPX close to end of year. Mm, couple weeks at least. We can still see a sell off into the end of the year, right? As we move into the end of the last quarter, there's usually a fairly broad market wide sell off for as everyone prepares for like tax loss harvests and stuff. There is seasonality in the market as well, which is not going to change. For GME, December GME OPEX, you're planning to hold a position in hopes of a March style run or just FOMO in if it starts running. I'll start building a position after earnings. How will you play CPI, FOMC, SLD being back to back? I might just buy like a longer term straddle, sell off the downside, and then average down the upside when it bottoms if SLD pulls back, right? So you just buy like a farther dated straddle, say like 14 DTE, entering that period. And that way, if CPI and FOMC are bullish, I can take profits on the upside, right? And then SLD, I can take profits on the downside and average back into a bounce on the upside move due to the better economic conditions, right? Alternatively, if CPI and PPI and FOMC are bearish, I can, take profits on the downside through SLD, roll down the long position, and then capture a bounce at a lower high. That's expensive. I don't know if everyone would be able to do that, but has anyone asked about GME CCs yet? Like 5,000 times. Do you think there's still a large short position on Rev, or was that mostly a delta hedging issue that's cleared out now? I think there's still a pretty big short position on Rev. The bar rate's still really high. They don't close, right? Their goal is to get them out of business and to prevent any the reason they got fucked a bit on Revlon, the shorts did at least, is Revlon didn't turn to their equity, right, to get capital. They just got a loan, and that kind of fucks up their plan of shorting the underlying. See, like what they're doing on Bobby is really effective, right? Because Bobby's doing, equity offers to drum up capital, and by shorting the equity, you ensure that they can't drum up sufficient capital, right? So by keeping Bobby at like $3, you almost guarantee that whatever dilution they do is gonna harm the company even more, right? That wasn't really an option for them with Revlon because Revlon got their money from an outside source. Still catching up in the stream, so ignore if already covered. Would you mind expanding on your rationale on the SPX strikes expiration from last week's Pickles picks? Specifically the 3,000 and 2,700 strike expirations. Thanks. For March, and those just capture any drop, and they can be rolled also. So if economic conditions are getting persistently worse, I can just add theta to those strikes. Let me show you. Maybe I guess people don't have access to an options calculator of their own. So say a 10% rise in VIX. This covers you through most of January on any drop to the 3,600 range, or 30. I can even pull that back a little, like 3,500, 36. A drop to the 3,700 range by end of year. These will be profitable pretty rapidly. And then, you know, obviously if there's a big drop, you know, if we move down towards like the like near the bottom of that like JPM collar, this covers that period as well. You know, once theta starts to decay more rapidly, right around mid-January, you can roll them out. But they're profitable even if they never go in the money. The goal is not for them to go in the money at $2,700 unless the market crashes, but then they hedge that, right? Shorts haven't given up on this bounce yet. When they give in, it's going to be glorious. Yeah, I know. I'm pretty excited about it. Yeah, don't forget that after the shorts are out, though, the longs aren't going to want to probably hold on. The economy is not getting better, right? Just because the market's bullish on, you know, near-term Fed moves and a slightly lower rate of inflation, that does not mean that, you know, economic conditions are better. They're still awful. We've discussed this for months, ever since October when we bottomed out on the SPX, and I was like, "Hey, this thing's gonna melt up hard," and it's been doing that, right? It's still melting up. The melt up can drag on for a while, which yeah, we learned the hard way in August. Just be patient. There's no rush to position into anything right now. You know, you can probably better off trying to play the long side. It's stronger. Everyone's like so eager to jump into like puts right away. And no, it's not like the market's first of all, if the market starts to downtrend, it's not like it's gonna crash tomorrow, right? It's gonna take time. There's gonna be a reversion, it's gonna pull back, you're gonna have time to enter positions. It's not like you're just gonna open Monday down 50%. Can you talk about your NVIDIA put thesis? I wrote a DD about it on it in Pickles Picks Starscream. Everyone's like, I don't know. I get the sense that everyone's like very panicky about their put positioning. Just slow. Buy plenty of theta. Enter them slowly. If you don't have a, if you're not targeting a lot of theta, buy closer to the fucking money, right? Can you talk about your NVIDIA put thesis for the next year? Okay, yeah, I did that. It's not really chip shortage. They're overpriced due to the market, largely, and they're trading at PEs that are kind of exorbitant. Um, a lot of the thesis revolves around Nvidia no longer being able to supply advanced chips to China, which is a huge part of their business. They will be reporting losses on in the coming quarters. Which stock are you talking about for the shorts giving up? SPX? No, all of the stocks. They've shorted shorts across the market have shorted everything very, very, very hard. Especially into the drop in October, and they haven't really capitulated on those short positions, not extensively. There's been repositioning, they've been holding on. If the market continues to push up, it's it's gonna break those positions. Eventually, they have to capitulate, right? And when they do, it's gonna be glorious. They're hoping that we hit bad CPI data again, that the Fed moves forward with a heavier rate increase, that PPI misses, that SLD gives them an edge, but I don't know if that's going to work out for them. There's a big list of reg show. Yeah, we should see reg show inclusion continue to rise because more and more short positions are buckling down and trying to hold on, right? Even on the stocks where the most risk is present, like stocks like GME and Upstart, and the basket stocks where we watch, where the short positions are super compounded. We even see those starting to pull back against their short positioning, and eventually you're going to see like a risk off because the market rising is directly inverse to their margins and where they have their margins deployed. When are you starting your small account challenge so I can ghost your plays? Jesus, I mean, if I do that, I'm not gonna do it in a way that allows you to ghost my plays. Thanks for your stream. Thanks, Starscream. I appreciate it. Yeah, if you just go into the Pickles Picks channel and search Nvidia, and the DD on like the initial short position will be there. I've been entering it pretty slowly. I have some puts. The majority of my weighting is closer to the money because the market keeps rising, so I get to buy more profitable puts. But I am still targeting that sub 100 range. Guys, also don't forget that when you buy options, they don't always need to go in the money. Sometimes just the underlying going up is sufficient to like the there's a good example of Friday. I had a little bit of settled cash left, and I bought a 4090 for fun. And it went up like 600%. We never went to 4090, right? You don't need the stock to actually, especially if you have theta. The premium, the extrinsic value on the contract will, uh, you know, increase as volatility picks up, and the intrinsic value will increase as prices drop or rise. So you're looking to buy at one premium and sell at a higher premium. You're too focused on the underlying price, I think. If you're concerned about your options needing to go in the money. Like if you buy $100 put on Nvidia right now for March, and Nvidia drops $50, doesn't not below 100, but significant drop, right? That put is gonna be worth a shitload more money than when you bought it. I think it's not a bad idea to remind people of what returns above an average trader gets, like you did on Friday, compounding gains and such. Also, I'm holding Yang calls to 300% or zero. Yeah, I think people's. I agree. Yeah, a lot of people significantly. I don't know. Maybe it's just greed. They assume that they need to print 100% or 200% or 500% on an options contract to be a profitable trader, and most profitable traders are making 2% per trade. So I know we've had some volatile markets lately, and crazy shit can happen. But your goal isn't to target the crazy shit; it's to make money consistently, day after day, until you have more money, and then you can have extra money, right? Instead of the last of your money to target riskier, higher reward plays. 406s were 150% when they crossed 406. If you focus on the entry point, profit comes from almost any strong move. My upstart Jan 50s have stayed in the money the whole time. Not in the money. Don't use that term. Profitable. They have been profitable the whole time. As are many of my January upstart calls, which is hard to most people don't buy in at the right time. Entries, when you're trading options, entries are really important, and most people, the vast majority of people, buy due to emotion and FOMO. It's better to buy shit when it's going down if you're targeting the upside than to buy it when it's already going up, right? See, like when a stock is declining in price, people like to buy puts here. And they like to buy calls here. But really, those should be like an institution would have those switched, right? They'd be buying calls here and puts here. You know, you guys have seen me do it on stream 100 times where, the SPX is like legging down and legging down and legging down, and I'm just buying calls and buying more calls and buying more calls. And then, it turns back around and they 20x, right? How do I make $1 million at $315 settled cash on Monday? Get 2 sex toys off of Amazon and start a OnlyFans channel. Work your ass off, but you'll get there. Yeah, I know. A lot of people learn to start trading in a bull market, but a bull market rewards. A bull market rewards almost everything, right? So it kind of blurs out a lot of the mistakes people were making, and bear markets are extremely unforgiving, right? And it's not just you guys, there's institutions that are down 30-40% this year, right? It's not, don't take it personally being down this year. It's a fucking bear market. If you've survived, you've done amazingly well, right? But not everyone's going to beat the market like 3,000%. And you don't need to, right? You just need to beat it. You need to remain profitable despite the macroeconomic conditions, even if just slightly. And you need to compound those gains over time. We are ARK now. ARK's doing a lot worse than most other institutions. Do you think Upstart going to 30-35 is reasonable before the need to roll Jan 23 calls? I hope so. Otherwise, I'm going to roll Jan 23 calls. If I'm rolling them, though, I'm probably going to roll with a lot of theta. My Gen 100Cs are still profitable, which is weird, since that doesn't normally happen to me. Well, we kind of hit an inflection point on the liquidity, and Ivy's been driving up ever since, right? We're seeing more and more puts sold off and long short call positions closed, right? And with that, Ivy is starting to increase as we move nearer and nearer to the flip point in the hedge. The market maker is going to, eventually hedge the upside, and when they do, Ivy and price will likely increase dramatically. I'm down 74% since 2018. Trying to focus on not losing money versus making money. That's probably a good place to focus, Tim. Risk is the most important thing. Don't lose money. The making money part, that's not actually that hard. It's the not losing money part that's really difficult. If you're holding a loss on the year, does it make sense to take profit on in the money CCs in December to offset some of the loss and not take the profit into 2023? I mean, if you get assigned, sure. But how are you gonna? You're gonna sell December 30th in the money and hope they get assigned? I don't know if they'll get assigned on time. Maybe. That's kind of risky. If you'd have to talk to an accountant because I'm not sure if the assignment occurs after the 30th, which it can. Um, will you still meet the current tax year requirements? Yeah, I'm not sure. You'd have to ask an accountant. Bear market has made me enough to finally pay off that goddamn Loch Ness monster. $2.50. Pumped for the next bull market. Probably got a couple years. If you're holding a loss on the year, okay. Since you mentioned BBY, do you see it going back to 6, or should I just sell my loss? Asking again, you skipped my question. I'm sorry, man. There's a chance for it to run back up. Gamma Max on it, I think, is at about $8. So you figure it could maybe hit 9, 10 with some FOMO, which it might get. It might get a little bit of FOMO. So, yeah, I mean, it's largely in the same position as these other stocks. I will say that the next leg down after that is likely to be even more brutal. Um, so be prepared for that. And it's risky because the company is going to be selling equity into that run, so the potential might be more limited than on other OPEC stocks. But yeah, there might still be a chance to get out above 6. I wish you the best. Yeah, it just kind of sucks. LSD, welcome to Dillionaire, man. Thank you so much. Hit me up on the Discord. I'll get you added after the stream, man.
Yeah. Yeah, we might have a chance, but we ain't got rope. Give us more than a chance, cause we ain't no coke. Get the cash in advance, cause we hold it the flow.
The Swiss spike we saw on Friday on Upstart and the 1 to 20 the week before. I think that's someone doing liquidity tests. I think they're just rolling liquidity between ETFs and Upstart and trying to walk a tightrope between actually having to cover and continuing to suppress the price of the underlying. More suppress the volatility of the underlying, but it's getting. I wouldn't call them necessarily liquidity tests. I think it's just spurts of covering in order to maintain a status quo that they need to hold for some period of time. Go back to the, river runs dry DD and think of that as like plugging leaks in the dam with cement, like band-aids. Right, so you got like a little leak in the dam and the water starts coming out and you try to patch it and then it pops up like a fucking Bugs Bunny cartoon and the leak pops up somewhere else and they try to patch it. A spurt, if you will, yeah. Thanks for all you do. Your mentality is something to behold and emulate. Thanks, man. I appreciate it. You are witnessed. Is there any news from the latest hearing on Rev, and where can I find the news? I think the bankruptcy court logs all the proceedings, so you should be able to look there. The link might be in the pins on the Revline channel in the Discord. I thought it got delayed, or like everyone just agreed to the terms for that meeting, and it got just pushed out. Like everything's gonna get pushed out to the next one. I think. That's what I heard. I don't really remember. I haven't been paying super close attention the last couple weeks. I'm probably gonna like average down my position before the last omnibus hearing. Hopefully the price doesn't go up before then. I think if I put like 10 grand in, I should be able to bring my cost basis on my shares down to like maybe sub $4, depending on the price on OTC at the time. Which I'm good with. I think a buyout will occur above that range. So, and then if they don't get bought out and continue operations, then I'm holding it for maybe like 3 years till they get relisted. I mean, the volume on those spikes are super low, so I don't see what liquidity they're getting from it really. I mean, it's just like a small amount of covering, right? They get enough. That's what they need. They need enough. Enough to not get put back on reg show or enough to get off reg show. Right. It's a pretty delicate balancing act. And the market keeps rising, which only puts more pressure on them. FTD period of GME occurring between the 9th or 16th. The October ETF FTDs. Oh, these are backwards. Hold on. I think. Yep. They begin on the 9th. The 9th through the 16th. ETF FTDs. Although on all the stocks are watching, it looks like the 9th. Actually, the 7th is the highest, which is weird. Hold on. Let me look at the FTD report real quick because there is something else here that I wanted to bring up. Yeah, so the spike in October ETF FTDs occurs on the 18th, which is... It's not huge, though, on any of these stocks. So it's the 18th. I don't know why the spike occurs outside of the OPEX period, but it does. So it's the 18th, which means that the settlement date is the 18th, 6th. So the largest spike in ETF FTDs is on the 6th. But GME is only 1.4 million on that day. So I don't expect it to be very significant. The following 2 days are low till the 9th, which is where the ETF FTD period traditionally begins. But the 9th is only 600,000 FTDs, then 300, 300, 280, 400 for the ETF FTD, like the entirety of the ETF FTD period. So, nothing really super exciting. Even like 1.4 million is probably likely to just cause a small halt, maybe in the like right at market open, and then probably fall back down pretty quickly. It's a very low number of FTDs. If compare it to August, where we had 2 million FTDs a day for like 4 days straight from the ETFs, and this one's not even as high as one of those. And that, so yeah, the 6th, I guess you could say the 6th through the 16th, but really I would expect the peak to fall between the 6th and the 9th, right there. That's where the highest concentration of FTDs are. What kind of stocks did you pick to grow a small account? SPY, SPXL, CAT, Upstart, GME? None or all of the above? I mean, all of those are kind of like expensive trades. On a small account, I would probably just be using spreads on like FANG stocks. What about Nikola? I mean, there's no value in that business. It just keeps going down. I mean, it'll probably have another volatility spike at some point. What the fuck? Their profit margins are horrendous. Yeah, I mean it's like an OPEC stock. Uh, Not my favorite one. Most of its runs are like ETF FTDs. Yeah. So they're shorting the shit out of it. I know volatility is pretty high. There might be like a good target for CSPs or something. I don't know if I'd want to play the upside on it. Hot topic, are you familiar with ground support coffee on West Broad and Soho? No. Is it good? Would selling CSPs on a pre-earnings IV spike be a decent play on GME? If you want to get you know what? Probably not bad, actually. Yeah, it might not be bad. Might bounce back by end of week. So, I don't hate it. You have to be a little bit out of the money, though. I don't see cat being back on the menu for the remainder of the year. Thoughts? Probably not. Thanks, Sean Daniels, rehypothecated Pigeon Will. Good to see you back, dude. All right. Oh, somebody wanted me to go over Kirk. This looks kind of interesting. Accumulation appears to be occurring. I don't really know what they do, but they're doing it a bit better, or at least institutions think they're doing it a bit better. Decently low float size. Average volume's pretty low, but maybe not like a bad buy and hold. I like the range it's trading in. Home goods, yeah. I mean, it looks basket adjacent, if nothing else. I think there's some volatility shorts on it, so maybe promising. Something to look at least, or keep an eye on. It's pretty cheap. I'd want to look into their financials a little bit more. I guess I could take a cursory glance here. Yeah, I mean, I don't think their liabilities are that bad. They're getting their cash flow kind of back on track. Okay. So maybe just some supply chain issues really hurting them. For growth. Rough. A big dive in EPS. Yeah, I need to do a little bit more research on this, but it doesn't look terrible. Like, it doesn't look like... I mean, they're priced like they're going out of business, but might not. I'll look into them a bit more. Might be something they're able to stabilize in a more robust credit environment. No options really. Yeah, probably not a lot of options interest. Although if the price rises, that could change very quickly. No, it's not. It's not Costco. Stream regarding your 7x 3000 SPX long puts. Uh-huh. I use the options calc and the max is like 2 to 3x June 30th. What am I missing? Well, if they go in the money. And those really far out of the money ones are more a hedge if, you know, something happens and causes the market to actually just tank, or we get an actual like an actual crash. I don't think I have 7x 3000 though. I think I have 5. I have 10 3600 for December. Those I might be rolling. That we'll see. I have some December 30ths at 4000 and 3950 and 3900 now also. But those are more for like the SLD period and to like start setting up a hedge against CPI. We haven't added much to the Upstart conversation this stream. I don't think there's much to add at this point. I mean, I kind of weighed in on why it went off reg show. I've weighed in on the liquidity situation on it. It's just wait. I mean, I have an idea of when it's likely to run, and probably soon. But you know, I'm not gonna pick a specific date because of the FINRA shit. It's too hard to pin down. After I sell to realize losses on GME for tax reasons, what's GSP strike seems decent to sell to get back in at. If market downs, GME still has a pretty strong floor around 2025, right? Yeah, I think so. That's also pretty close to like its book, like near its book value, especially if you see SG&A improvements with this earnings. Their book value could climb up to about $20 a share. Their stuff is way too expensive for average person. I mean, that's fine, right? Luxury brand providers tend to do better in recessionary climates because the people who buy their shit are less affected. If Jimmy becomes profitable, how does that affect your opinion on a share offering happening? I don't think we're going to see a share offering on GME probably for a couple more quarters, and that's only if they need to move back into another growth cycle, which I don't think we'll see for maybe a little bit longer. If they can achieve profitability um, without burning through the rest of their capital, so they've got like 3 to 4 quarters, um, then they can sustain a positive free cash flow for a little while and not have to do a share offering. And that, you know, if they offer shares at this price, the fucking C-suite's gonna leave, right? Don't forget that, you know, all the insiders have shares at like $226 a pop, right? Which is, you know, like $55 post split. And that's their compensation, the entirety of their compensation. So yeah, I don't think they're going to be encouraged to move into another share offering until they can get a sustainable stock price above like $60. And they're not going to do that without showing some profitability and positive cash flow. Yep. RC's only forward guidance. Short-term profitability. It's important for them right now.
Kirk. I wasn't looking at for a squeeze, but it might be a decent value buy. Somebody asked me about it on the Discord. One of the other Dillionaires is kind of bullish on it. I'm not interested in its squeeze potential, but I am kind of interested in its value potential. I need to do some more digging on it, but I wasn't sure if I was shadow banned. You missed a Ko-Fi. Oh shit, sorry. I think after a year, 2 years almost, I'd be better at this. Sorry, the question was probably skipped. Would you be opening some exposure post GME earnings or before, just in case earnings were bullish and we run earlier? I already have exposure. I have shares. You all have exposure because you have shares, right? Well, most of you do. And I know not everyone has shares for GME, but the vast majority of you do. That is in fact exposure to positive EPS. So yeah, I wouldn't be opening any exposure until after earnings. If Jamie goes up to 50, awesome. And like if they show like a 2000% increase in EPS, I'm all for it. But yeah, I have shares. I'm not buying calls before earnings. They're overpriced. If you want them, buy them further dated so that you don't you're not affected by the near term IV. I'm prepared to sell ZOM CCs in the next week or two for my entire position, which is the core of my portfolio. Looking at March 17th, $84 vicinity. I'd buy these back mid-January. Can you share your thoughts? Man, really, with all this oil volatility coming up this week? That seems really risky. If I mean, I guess if you think it'll be bearish, I think you're targeting kind of a awfully low fucking range to expect to hit it by mid-January. I could see a pullback into like maybe the $92 level, but I assume that you'd want to buy them back after they went out of the money. So I might target a little higher than that, and safely probably like 100. That might be a narrow window too, but between oil having a small midwinter dip and then rising into the latter half of the winter. Don't forget the distillate shortages too could put quite a bit of demand on oil as winter progresses. I know like the Northeast, like heating oil is becoming quite a problem. How are you feeling about Fubo these days? I love it. I bought like 3,000 more shares last week. I still think the company is great. I think probably a lot of they're probably picking up a lot of subscribers during the World Cup. Economic conditions around the world are pretty uncertain, and I think people in times like that tend to turn towards like sports and stuff and community, and you get more of a focus on things like that, as the economy declines. And I think lots and lots of subscriber growth through this period, so I think it'll be really good for their next earnings. I'm pretty excited about it. I'm still buying it. It's a 1 to 2 year play at least. If it shows a significant amount of growth in that period of time beyond my expectations, I may hold it even longer. I think that if they do show a sufficient amount of subscriber growth, like they'll probably get bought out by someone else, especially if they pick up more and more broadcasting rights. The chances of a buyout just increase exponentially. Jimmy Kabara could show 2,000% increase in EPS, and the smart money will declare it a disaster and should be avoided. I don't think smart money is going to touch GameStop for a while. DRS isn't something they want to get involved in. They want to own large swaths of the company and big amounts of their bonds in order to provide them capital for growth. And if DRS kind of interferes with their ability to own a large amount of the underlying stock, they're not going to be very interested. If they do take positions, they'll probably be smaller initially. It kind of cuts off some of GameStop's ability to get good corporate funding or institutional funding, which could limit their future potential growth. And other institutions know that too, so you know, it has a compounding effect. DRS is the worst. We should all DRS our SPY shares and lock the float. The float's infinite, so that'd be stupid. It's an ETF. Anyway, yeah, I guess that's about it. Anything else? I'm gonna wrap this up. All right, guys. If you have any more questions, or I wasn't able to get to them, or I missed yours, I'm sorry. Hit me up on the Discord. I'll be around probably through the end of the day. I hope everyone has a great rest of their weekend, and I'll see you at Market Open tomorrow. Say one more bullish thing about Upstart. I mean, it looks really good. I don't know what else to say about it. It looks really good. I think we have a pretty high probability of running in the next few weeks, and I'm excited about it. I'll be buying more over the next couple weeks. Ups in the name, right? Yeah. Thank you guys. Have a great weekend. See y'all later.